Hey guys and girls, Nathan here. As always, Tuesday night chat. Thanks a lot for tuning in, as always, and good to be a part of your Tuesday night evening or Wednesday on the way to work or whenever you choose to watch this broadcast. Today um, want to touch on a few different topics. We're going to do a bit of a different broadcast this evening, which we'll push to another week, which was going to be where we go onto Instagram and we get other people in the community to come online and ask we can have a conversation style. So that's something that I'm going to be planning for over the course of the next few weeks. Um, just didn't know how to set it all up in time for everyone on Instagram. If you're watching this from Facebook Live, I encourage you to make sure that you follow on to Instagram, which is B.Invested over on Instagram. I'm sure you'll be able to find it easy over there. I do stream this to Facebook and to Instagram, and something that over the course of the next couple of weeks, I will be doing a Instagram live, bringing you guys in. So if you have any questions or would like to have a chat or conversation, we can do Q&A and ask those questions, yeah, together. On that note, I'm going to get into some news of this evening. So I want to look at some news for maybe 20 minutes, get on to a topic of conversation today, which is, sorry, I've got agents texting me on my phone over here where I'm recording from, reading their messages. It's never ending, the deals. First 20 minutes looking at news, what's happening out there in the market. Second 20 minutes looking at topic of discussion today, which is the hyperinflation, and the last 20 minutes is answering questions in from you guys in the community. Just wanted to touch on a couple of little things. First, last week we ran a competition on the live where I said that I'd be giving away 10 ounces of silver, so about $500 worth of silver, to someone that would go into write a review on the B.Invested Google page, join on the Birch feed, or book in a map session. And there's been a lot of really cool stories that I've heard over the last sort of week from seeing that, and people texting me and writing in, which very humbled and very touched by. And I'm going to leave that to the last part of this video to announce a winner. I have asked around a fair few people, and I've got people texting me through on my spare phone here as things progress throughout the evening. It has been a very difficult decision to choose a winner, because there is some really touching stories. People that are talking about the information they've provided has saved them in aspects of not losing money over the last 6 months. People that have been able to take advantage of things from information, and really cool stories. People building large property portfolios in quick periods of time, even though we are going through a depression. And it is is it an inflationary depression or a deflationary depression? And we will touch on that this evening as well. With it, if it's not too late, if you want to pop over, check out and leave a Google review, and join on the Birch feed. It's still open for another, say, 45 minutes or so until I draw that. So, just recapping on last week's live stream, I did talk about precious metals, cryptocurrencies, and whatnot. And as I got offline, I thought, I left these things that are in my head that I didn't share with you, and a couple of really important points that I made about 10 minutes after I got offline, that I wanted to recap on and talk about. Um, One of my points is that I always buy the physical item of anything. So if I'm buying a property, I'm buying a physical property. I can go and see it. I can go and do whatever I want to it. I don't buy an ETF. I don't buy a real estate trust. You don't know where your funds are at. You don't know who's controlling it. We've all seen Wolf of Wall Street, and there's a lot of these funds that are out there. Personally, I always buy the physical. So if it's a property, I'm buying the property. I'm not investing into someone's development fund. I'm not in just realized that over on Instagram, someone's saying that I'm sideways. So I'm going to tilt the camera around to this angle. Let me know if that is better. Um, I was asked to turn the camera sideways from someone today, so hopefully that's better for you guys. So sorry if I'm making you dizzy over there on Instagram. Um, so yeah, with it, um, um, always go to buy the physical. So if it is metal, I only own physical metal. I don't own paper contracts of it because I believe, and some of the governing bodies out there that like to write to me, and awesome. Yeah, so looking at some of the government authorities out there, they don't like when I talk about certain things because they've been writing certain letters to me. Hi everybody, hi all my fans out there. Um, so obviously, as always, no financial advice is given. All I'm doing is talking about my own personal experiences, my own thoughts, my own beliefs, and that's just an opinion of a person, and we all have our own views and opinions. But I always personally pick up the physical because I do personally believe, and I know I might offend some people by calling ETFs a scam. However, that's my belief system on them, and I only own physical assets. If we look at the physical price of, say, silver, for example, physical price at the moment is about $33. The spot price, sorry, is about 32 bucks, $33, $34. It's fluctuating. It did hit a high of about $40 the other week. However, if you go to any bullion dealer, go into any store which sells gold or silver, you can't pick up silver for really less than sort of $42, $43. In most instances, around the $50 mark to purchase those metals. So, yeah, there is a big discrepancy, right? And that's because I believe, personal opinion once again, no financial advice, that the paper contracts are manipulated and it is a Ponzi scheme. That is my view. And, some people call me out for calling it a Ponzi scheme, and that's just my opinion. Someone asked, where do I purchase my bullion from? I purchase from all different sources. I'm not aligned to any outlet, any seller. There is a couple of good ones. There's one in Melbourne and one in Perth, which I've been buying a little bit of metal from recently. I buy from a lot of coin dealers over the years. I've gone in and realized that there's differences, like a coin dealer's collecting a coin or selling a coin. They're not a metal dealer. So I've got into them and found some bargains over the years. Pick it from all different sources. Be very careful if you're going to go buy that sort of stuff from eBay and all those sort of places. My view onto how high they can go, most people, for trying to collect that sort of stuff, are buying in anticipation there could someday be some sort of hyperinflation, which is what I foresee happening, and that's why I think a lot of people talk about these sort of metals that talk similar to what I talk. However, I see it across the board: property, food, every commodity that we deal with on a day-to-day basis. So yeah, it's just one vehicle. How high could it go? Well, if a Big Mac could go to $100 or $200, you've just got to expand it, right? Like, could a property price double? Could a property price triple or quadruple? Could metal go up 10x? Could it go to $500 an ounce or anything like that? Definitely possible, but you've got to ask yourself at that period of time, what would that buy you in that current market? So if silver was to go to $500 or $1,000, what would be the price of your average grocery bill? What would be the price of a suit? What would be the price of my t-shirt? What would be the price of any sort of good at that period of time? So just some thoughts on that. We are at the end of September. Next week, I will be recording this in October for you guys. October will be a very interesting month. We've seen some volatility out there given the month of September and the state of where all the financial markets are at. We will be seeing our budget, which comes out in May generally. The budget will be coming out in October, so we'll be seeing some interesting incentives, stimulus packages, what will be coming through in the budget. It will be very interesting to see. So just my thoughts of the day. We have potentially a rate cut around the corner. It's looking more and more evident of a rate cut. It is on the edge of, will we get the rate cut in October or will we get it in November? But we are on the edge of a rate cut. If someone was to ask me to put a bet down as to when we would see a rate cut, I would believe that we would see, heading into potentially negative interest rates around or before March 2021, before all the stimulus packages end. So it'll be an interesting few months for us. Got some articles here, and 3 articles. I made a video on the weekend for those of you that saw it or didn't see it. Made a video about some news that came out last week about them playing around with lending policy. So we've just, remembering this, we've seen the Royal Commission come out allegedly, right? And who backed the Royal Commission, right? Is it just a show to give confidence and for people to go, oh wow, they're doing something about it. They actually give a care or give a crap about our positions or whatever, or was it the bankers' game anyway for them to control? So it goes on to read, the government wants to make it easier for you to get a mortgage amid the coronavirus recession, but there is a catch, right? So firstly, there's 3 articles that I did post. I realised that it created a bit of a stir last week, people with all different differing views. Another article goes on to say simpler lending rules for home loans and credit to free up the economy. Free money for all, eh? And I want to dive into this a little bit into depth this evening. Goes on to read, another one is responsible lending laws to be axed, right? Responsible lending laws to be relaxed. This here goes on to talk about how APRA had created some laws after the GFC and the fallout of 2008, 2009. And they got tighter and tighter over the course of the last decade, and now suddenly they are removing them. Right? Them removing, the lending practices that are out there. How relaxed will they get? Who knows, right? This is all going to happen before March 2021. What would be the reasoning behind doing so? We need to get more currency creation, more liquidity floating through the markets. What is more of a better way to restock an ATM? Let's pretend that we've got an ATM machine. We put our card in, we get some cash out. If there's no money in the machine, no one's getting cash out, no one's getting cash out, no one's going to the shops, no one's buying anything. So looking at the lending laws, if everyone's getting their ATM restocked, which is their house, and the ability for them to get cheap credit and the ability to obtain that credit. Hey Lise, how are you? Just seeing that there's a request there to start to be in your live video. So that is something that we're looking at doing next week. So yeah, looking at the refilling of the liquidity out there in the market, relaxing of lending criteria, what will this all lead to? And I think it is obvious, but in case it's not so obvious to some, let's go through that today. Any questions that you may have, feel free to text through questions to this number 0426 887 564. So 0426 887 564, and I will answer those questions with you this evening. So seen this article the other day which came out on news.com. Josh Frydenberg casually reveals eye-watering $83 billion deficit, right? And this is really, really fun, right? I'm going to go and open up a page here and look at Keating. This is just for our own little giggles here. Keating deficit 1992. Second term and 1996 election. In July 1993, a budget deficit for 1992/1993 was disclosed at $14.6 billion, right? We went into a recession in 1992, right? And the Keating government had put us into a budget deficit of $14.6 billion. And looking at the Here's another article here, cabinet papers from that. There was a lot of reform at the time. What happened back then? Very, very interesting. But I'm just going on to see. I thought it was around the 96 billion dollars, whatever it was. Here we are in September the 25th, 2020. A lot of news out there in the last week. Josh Frydenberg, the treasurer of the country, has announced. Um, um, sorry, just reading some of your comments here as well. Has announced that there is a $83 billion deficit, right? This is an $83 billion deficit for something that didn't even start only 6 months ago, right? 6 months ago, what were you doing? Right? 6 months ago, how was your life, and how was your life compared to 6 months later? You know, is this the start of a recession? Is this going to go longer? 100%, right? We're going to have a decade of this, right? This isn't just something that's going to go away. You know, Melbourne get out of lockdown next month or whenever it is, if they ever get out. You know, hopefully, everyone there gets out very shortly. You know, what will be the flow-on effect? What about all those cafes that suddenly don't have a business? What about all those, you know, places which, you know, all those businesses? Are people going to go? Let's say that a restaurant works on small margins, right? Let's think that a restaurant might only have 2 weeks worth of cash reserves at its disposal. We've got food there, which has now gone off. They're going to have to be more expensive for those things. We've now got, you know, people that are scared. There might only be half the amount of people going back to a cafe in the next 6 months. How is that going to be for these businesses to reopen? How deep is this recession going to go, and what sort of stimulus measures do we have to put in place to get people back into their jobs, get people back into the workforce? How are the numbers for unemployment really being calculated? How are they being calculated? That's the interesting question, guys. Um, this article here goes on to read, there's taking out the trash, and then there's taking out the trash when it comes to bad news. But how do you shove $85 billion deficit in the budget wheelie bin and just casually moonwalk out of there? That was pretty interesting, right? I'd imagine seeing the guys moonwalk out there, because that was fake as well, most likely. It's a big number, hard to miss. But today, the treasurer, Frydenberg, set a new Olympic standard for just slipping in some big news in a press conference, um, ostensibly about credit reform. He just casually dropped in the final budget outcome for 2019 to 2020. The budget deficit is an eye-watering 85.3. This is $85.3 billion worth of deficit that we have in the country. We haven't even gotten to the budget yet. How many years is this going to play out for? Will this lead up to how big? I personally think that we're going to see $1 trillion worth of deficit to the budget over the course of the next few years. We've seen almost $1 trillion worth of monetary easing and off balance sheet. A lot of this has been covered up in RBA spending and, you know, all that sort of stuff. So yeah, here we are, $85.3 billion in the red. That is $500 million improvement from what estimated terms of the deficit, but a $93 billion deterioration forecast at the end of last financial year. Why are we looking at the last financial year? Right, it's very interesting. Let's just take that sentence back out. This is a $500 million improvement. Oh wow, right? 95 or $95.5 billion. Improvement from what was estimated in terms of the deficit, but a $93 billion deterioration forecast at the end of last year, right? How come they forecasted this before Corona came out, right? If this isn't a scam, if this isn't, you know, made up, if this isn't fake, if there is not a larger agenda occurring here, why was this already in the pipeline last year, right? Ask yourself these questions. It is the biggest budget deficit since in the Australian budget history, eclipsing Kevin Rudd's $54.5 billion budget deficit during the global financial crisis. Remembering that went for 1 year, 2 year, 3 year, 4 year, and there was ramifications from that. This is 6 months into this crisis. Welfare payments soared by 57.7 billion, higher than the 2019 to 20 MEFO estimate as a result of the measures of JobKeeper, coronavirus supplement, cash flow boost, and other economic support payments. Tax Receipts tumbled by 33.1 billion as the economy was shut down to stop the spread of the said illness. Remember that one took 10 years to pay down until the budget was in balance or political mumbo jumbo for close to surplus, but not quite there yet. Traditionally, the budget deficit is closely guarded until budget night, with journalists forced to sign a non disclosure agreement before entering a 6 hour lockup on the grounds of information is market sensitive. Here we are, right? This is the normal sort of protocol, and they've already dropped out. Oh, it's only nearly $100 billion so far. Like, expect it's not too bad. But anyway, hope everyone's well. Hope you're not scared of the boogeyman, and enjoy your free money that we've printed out. And soon we're going to come back and we're going to tax, enslave, and track and inflate your currency, and it's all going to be worthless anyway. And we're going to have full control over you, just like a totalitarian fascist commie state that we are. That's pretty much what is going on here, right? Goes on to read, uh, faced with the faced with confirming the biggest budget deficit in Australian history, Mr. Frydenberg clearly decided a different approach was required. Oh, we're screwed. It's all right, you know. Consider that for a moment. That just last year, the Treasurer had a forecast for a budget surplus in 2019 to 2020 of 4.1 billion. That's a $90 billion reversal into the red as a result of said illness, right? Notice how it's always as a result of this. But didn't we have, signs of these sorts of things happening back in the middle of last year, right? If not, why did we start dropping our interest rates? Our economy is great. Let's just drop our interest rates. Interest rates go up when our economy is good. Our economy hasn't been good for a decade. We have been fudging these figures. We have been manipulating currency. We've been manipulating the markets. Some people out there say that we're in a bubble, right? Are we in a bubble? We are in a bubble, right? Are we in a property bubble? No, this is much bigger than any sort of property. We are in a debt-based fiat Ponzi scheme, currency manipulation bubble, which will come to an end, which will be an inflationary showdown, right? It's I have a picture like little cartoon characters of dollar bills and 50-cent pieces and whatnot fighting it out like in an old Western film, because that's how it's going to be, right? It's going to kill itself, right? But anyway, goes on to read, there are a few things that the government knows that everyone else doesn't know, so governments love to control the news, letting you down nicely, right? So first time ever that sort of 3 weeks, 6 weeks before a budget release, that they will, let information go out there. Yeah, so it just goes on to show almost $100 billion in the deficit before budget, and that's within 6 months. What are the next things I wanted to talk about? Got this picture here. This was sent in from someone from in the community. There's a bit of this going on out there. New auction record. This is on the news, right? Vaucluse home sells for $24.6 million. So here we are looking at auction results out there nationally, right? There is very, very high auction clearance rates. I think it's almost 80%, right? We're meant to be in the middle of a depression, right? It's a recession that they've called so far, right? A depression is 4 consecutive quarters of negative growth, right? A recession is 2, a depression is 4. We are in a depression, right? And we will see that, right? I just said it like 3 years before anyone even realized that we were screwed, that we're in the global financial depression, the GFD. But here we are seeing all new records. So my topic of discussion this evening is, will we see hyperinflation? Will we see a deflationary period? Will we see something different? What is my view? I've covered this off extensively. I did make a video going back about 6 months ago when this all started to unfold. I drew it on a whiteboard, and it was probably one of the number one videos that I've ever filmed. It is available on YouTube. If you go to YouTube, type in Nathan Birch, hyperinflation. I've never researched it, but it'll be there. It's one that's got a heading of hyperinflation, and it's quite a popular video from around March. where I did explain my thoughts, my views, and what would come in a hyperinflation scenario. But I think it'd be good to discuss this, look at it real time as we're going through a hyperinflation. Are we in the hyperinflation yet? How will it all pan out? Lots of questions, so I will want to be answering this for you as well. So I will be getting on that very shortly. Um, but there was one last article here. This is from Bloomberg. Um, the risk bank sent its policy rate into negative territory in early 2015. Right, we can only look at what has occurred and look at stats and see how that will flow into other sort of markets. Right, history leaves clues, things that have happened. We need to go back and look through, other people. Right, better way of learning from your mistakes is learning from other people's mistakes and seeing what happens out there. So the risks bank sent its policy rate into negative territory in early 2015. Wow, cool. There's another country that's in negative interest rates, reaching a low of minus 0.5%, so a 0.5% negative, before raising it back to zero late last year. So 4 years in the negative territory, hitting a peak of a 0.5%. If we go negative, we're not just going to see a 0.5%, folks. How high will we go? I reckon we'll see -2 to -3%. Personal view, personal opinion, no financial advice. Swedish mortgage rates dropped below 2%. Swedish mortgage rates dropped below 2%. So when the interest rate went to negative 0.5%, the banks were giving less than 2% interest rates, right? When am I anticipating to fix my interest rates? Everyone always asks, should I fix an interest rate or not? Firstly, if you're thinking of doing anything with your loan or getting a loan, you should reach out to my team at Zinger Finance, and we can help you work out a debt strategy on how to navigate through those markets. But I'm planning on fixing my rates, not yet. Planning on fixing them when interest rates do go negative. I've seen people fix them in for like 2 or 3 years. They're like, they're only 2.5%. But what about if when they come out of that fixed period, if interest rates, you can't get them at the lowest point for a longest period of time? So personally, I'm looking at fixing my rates when we're down almost close to zero, and a figure well under 2% would be my target range personally. But this goes on to read. This is a Bloomberg article. I posted the article in Birchfeed. I forget which article it was. I just took a screen grab of it. This is the most telling sign of what we're about to see happen to the market. Swedish mortgage rates drop below 2%. Getting ready for it, right? Causing house prices to surge to double-digit annual gains. But unemployment fell and the economy grew. Crucially, headline inflation rose steadily from minus 0.4% in mid-2015 to meet the central bank's 2% target 2 years later. Inflation expectations also rose, right? So here we are. We're seeing that the Swedish bank's central bank had dropped the interest rate policy to negative 0.5% going back in 2015. It's at negative for 4 years. After that period of time, throughout that period of time, house prices saw double-digit growth for many years, right? It's not your property that goes up in value. I've talked about this beforehand. When people talk, the news is going to start coming out and talking about all these good stories. They're going to be talking about all these people. It's going to be all these whiz kids out there like Nathan Birch back in 2010. They're going to put him up as poster child. So probably won't put me up like that again. I will be doing a lot of media stuff. I have been giving some opinion pieces to some of the mainstream media recently, and they are taking it, interestingly. And these are really, cool people that I've known for a long period of time as well. And they see what is coming, right? They're seeing what is coming and actually support freedom of speech and talk about this sort of stuff. But yeah, they're going to come out, they're going to talk about the market, then they're going to say it's because of Liberal, it's because of Labor, it's because of government, it's because of negative gearing, let's do an election, let's remove negative gearing. People asked me last year, what about if Bill Shorten gets in, it's going to stuff the market, negative gearing is going to get removed, right? No one's questioned the real fact, right? No one's questioned the real fact. Property prices don't rise. The currency manipulation is what's causing this, right? We will start seeing this all through the next cycle. Once you take that red pill, you cannot go back to seeing the world as it used to be, right? It's not the properties that go up in value, it is the manipulation of the currency supply and the manipulation of liquidity in the market. They're going from a quantitative tightening period to a quantitative easing period, and they are stimulating the market from all different perspectives. This has occurred throughout different countries, throughout different nations, throughout different currencies, throughout different millennium as well. So, yeah, interesting to look at. So, yeah, looking on that, I want to get straight into this evening's topic, and that's to talk about what will we see in terms of inflation or deflation. Are we going to see a hyperinflation? How long will a hyperinflation take? What is the best way to protect yourself through a hyperinflation, etc.? Personally, as a disclaimer, and this ain't no financial advice, I'm not your financial advisor one, this is a disclaimer to be very clear that I've never been through a depression, right? There are different nations which have been, and different cultures that have been, different currencies that have been deflated. I've talked about the different sort of currencies over the years, like the Hungarian pengo, which was the worst hyperinflation in history. We can go back to the 1920s in Germany with the Weimar government and the hyperinflation there and the Hitler made him rise to power. We can look at Zimbabwe, Venezuela, Argentina. There's so many different nations which have experienced hyperinflation. I have not experienced a hyperinflation, but I've thought about different ways to navigate through a hyperinflation. And you need to think smart about this. You need to go back and do your research, right? Because this is not a normal recession. This is not a property cycle. This is not a market cycle, right? We are dealing with a totally different beast, and this is quite well could be the collapse of a system, a time frame in history, which I believe that we're on the precipice of. Will it happen in 2020? No. And I never said it would. And if you go back to my video from March, I said it would start occurring in a period of about 3 years to 7 years. 3 to 7 years, we need to start seeing that currency float around in the system. We need to start seeing the velocity of the money going around. We need to start seeing, we're in a deflationary period still, but we're still starting to see inflation in different markets. This is a market where I believe that we're going to start seeing the removal of a middle class. We're going to see more welfare dependent people. We're going to see more socialism, more communism, which is very, very obvious today. We're going to see people becoming reliant and dependent on governments. We're going to see people becoming relying and depending on the need and the support of the welfare system. And you can either be a part of that and be stuck to that, or you can be able to be a recipient of all those people that are spending their welfare checks. For me personally, I want to be the guy which is secondhand receiving benefits from this. So I want to be holding assets which are going to benefit from people that are dealing with that welfare check. So I don't want to be the one lining up to get Centrelink, right? I want to be the one collecting everybody's money from Centrelink, right? And that's cool. And I know there's some people probably watching this and going, "Oh, how dare you say you want to go and do that?" Someone's going to be collecting it, right? And I want to be able to provide certain things in certain different areas in the economy to be able to support that area of the market. So here we are looking at normal inflation. They say that headline inflation should be around that sort of 2 to 3% band where they're looking at. What does that involve? What sort of inflation does that cover off on? Is inflation good? Are we seeing stagflation? There's people out there talking about stagflation, which is like the nation of Japan, which is very different to what other economies are seeing. So yeah, looking at a few things. Are we in an inflationary period or are we in a deflationary period? I personally feel that if we look at it from one side of the coin, we could actually be in a deflationary period, which we have seen for the last decade. What do I mean by that? So, what stimulus packages have been created in the past, right? So let's go back to the 70s, right? We've got the Industrial Revolution of the 40s, the 50s, the 60s, trying to get us out of the World War II era. Everyone go and get married, get a job, build a family, white picket fence, be proud of yourself. currency died, manipulate the currency more. I don't have any of my charts today to show you and explain on the charts of where we're at and what we've seen at those periods of time, which I know everybody loves when I start throwing shit around, which is cool and fun. But I just don't have any paperwork here today to do that. So in the 90s, let's look at the recession we had to have. What did we change in Australia at that period of time? How do we get out of that inflation? How did we get out of that recession? Firstly, we stimulated the economy by giving, and people might hate me for this, and apologies, and don't mean to be that way if you do. We manipulated the system. It was normally like a dad go to work, mum look after the kids, one income family. We stimulated the economy by making a two income family. Now you've got two tax slaves. We give stimulus packages to a new industry that we create, which is childcare. Everybody goes to send their kids off to school while the parents go off to work. And there's a new industry. They support that one industry. They keep unemployment rising, going down, and more cash is going out into the system, more tax slaves there to be able to pay. We then go into another cycle where we start ramping up immigration, making sort of incentives to bring in mass migration, which is cool. It's what's causing the need for housing and all that sort of stuff, and growing out the nation. We have baby bonuses, which start coming around the early 2000s. We started seeing first homeowner grants to stimulate and prop up. Buy a house, we'll give you $7,000. Buy a house, we'll give you $14,000. Buy a house, we'll give you $20,000, etc., etc. At all these points in time, we're seeing interest rates get reduced and cut down to a point in the GFC where we started seeing more rapid amounts of this, and we take an interest rate policy almost to a zero interest rate policy. And we have never been able to even increase interest rates once in the last decade, from 2010 to 2020. So 10 years has now officially passed, without us being able to raise interest rates by even 1/4% interest rate rise. So where are we at now? They're giving you free deposits, basically. So the government is backing some incentives to give first homeowner grants, so they can do a 10% deposit or 5% deposit, no mortgage insurance. So there's those schemes going on. We've got incentives of like $25,000 to do a building on a house. You've got free stamp duties. What incentives are there for people to get into a property? There's so many incentives to get into property. There's interest rates at almost zero interest rate policy, 2% for $1 million worth of debt. Right? Just think about that, right? If someone said to you 10 years ago or 15 years ago, interest rates would be 2% at the bank, you can go get yourself a mortgage fixed for a couple of years at 2.2% or whatever, and you can be paying $1 million for a mortgage. That's $400 a week. It's cheaper than renting to buy $1 million house, right? But people still can't afford to do it. So we're going to give you a deposit. We're going to give you this. We're going to give you that. So, the ability to get into property, the ability to purchase stuff, to get into a car. Let's look back in 2008, 2009. Has anyone ever dawned to think, back in 2007, people would have a 20-year-old Daihatsu Charade. Back in 2007, people would have a Datsun Bluebird. Back in 2007, people would drive a Holden Kingswood or an old VL Commodore around. These old crappy cars, which are now collectors and sell for a lot of money, right? People wouldn't have thought that, right? If you look back now, people don't have cars that are more than 5 to 10 years old. All the cars out on the road are much newer than sort of 10 years old. So what happened and what fundamentally shifted that period of time, they made incentives to pay you to get your old crappy car off the road and to give you new debt and issue more liquidity into the system by printing more currency, by getting everyone to rent a car, i.e. get a loan to buy a car. And the system, was flawed at that period of time and became worse. And now, it's never cheaper to purchase a car, right? To go out there and purchase a car, your repayments, what would it cost you to hold a car? I don't know. I don't get car loans. But, the interest rates on car loans, you see them all the time. They're like 1% interest, 2% interest, 3% interest as incentives to go and purchase a brand new car, right? So if you wanted to go out there and purchase a car, it has become cheaper and cheaper to do so. So is that inflation or is that deflation? Paying for your mortgage on your property, is it inflation or is it deflation? It's more cheaper now to hold on to a property because of the interest that they're charging and the ability to get into that said property. What about your mobile phone bill, right? What about your home internet bill? Is it more expensive than what it was 10 years ago, or is it cheaper? You're still getting the same service, you're getting probably more data, you're getting faster internet, but has your internet bill gone up? right? So in some areas of the economy, we have got this, stagflation area, but in other areas that's starting to crack, right? And due to all the manipulation, what were the factors that we had to install into the market to generate that manipulation, right? Did we lowered interest rates, we gave all these incentives, we're paying people. How many of those options do we have now? We have given you all that we can give you, right? It can't go much lower than 0%, right? Let's be honest about it, right? When we look at interest rates, we need to question ourselves, will they go negative 20% on interest rate? I really highly doubt it. I'd love to see it, but I don't see it being something that's sustainable for them. Will they go negative 1%, 0.5%, 2%, 3%? My target range, I've set it for 4 years, -2 to -3% interest rate is my target range from the central banks around the world. So once we're at this level, what else can they do, right? They can give you a digital currency. They can give you a digital illusional wealth. They can give you universal basic income. But then what about that once that doesn't have any sort of play? So I believe that we're going to enter into the phase of the next boom cycle from all different areas. We're going to see massive inflation. People are going to feel wealthier and all this sort of stuff. But all they are doing is drinking the devil's juice. This isn't the devil's juice. This is alkaline water. But they'll be drinking the devil's juice, which is enslavement, fascism, communism, and totalitarianism by having their digital ID with their digital dollar, taking all that free money, and then being able to, take part in getting that free currency, but you know, enslaving himself into the next chapter of this system. So yeah, looking at food, right? So a lot of people say, "Oh, Nathan, I know you say food has gone up a lot in value," and I've got a lot of messages here from people, which I'll get into very shortly. Um, Keep sending me. Like, I find great enjoyment out of reading your messages. I actually only open my messages when I video and film, but I'm going to go through and answer a lot of your questions if you have texted it through. The number for texting me here is if you've got any questions or got any things that you've seen increase in value in the last couple of weeks. 0426 887 564. That's 0426 887 564. Always have to look at it because I don't even know this number myself. So, but yeah, looking at food, right? If we look at food, you can still buy milk for $1. You can still buy bread for $1 or $2, whatever the case may be. But the quality of your food, the quality of what you are eating, the quality of what you are consuming is getting worse and worse, day by day, week by week. You're getting less and less value. So how bad can that quality of food get to before it's unsustainable for them to have to not push up the prices, right? Um, if you really want to look at where inflation is at, look at the food that costs you a lot more, like the organic food and the food that's of better quality. And then you'll start seeing, shit, this food actually starts tasting like what I used to eat in the 1990s, right? And what I used to eat in the 80s and what I used to eat in the early 2000s. The quality of the food has gone lower and lower. Soon, you'll just be eating cardboard, right? You'll be eating plastic, right? And that's basically what half of our food is that we are eating at the moment. So yeah, how much more can they manipulate this? We are getting to the end of the road with our current, system and the current, sort of currency, and we're going to see an inflation. I personally see as they're printing more and more of this money, people are being reserved. There's so many people out there that are scared. There's so many people out there that are not, doing stuff, and that's cool. But what about when those people go, it's not as bad as what I thought. I've now got all this money. I've paid out all my debt. I don't have any credit card debt anymore. I've used all my JobKeeper, my JobSeeker, my tax breaks, all of that sort of stuff, and I've paid down my debt. Right? What's going to happen at that period of time? When people go, well, look, it's not that bad, I'm going to go start spending, and we start seeing the value of goods rise, right? What's going to happen when the velocity of money starts going in? What measures do we have to wind back, right? And all this money and currency creation that they're doing, imagine if they increase the interest rates from a quarter of a percent to 0.5%. That's 100% growth in the cost of money, right? What happens if it goes up by to 2%, where it was only 3 or 4 years ago? If the RBA was at 2%, what would happen to the cost of funding out there? Who would go bankrupt? Who would go under? A lot of people would, right? So that's where I see that's a checkmate. So when you sit there and think, are we going into a deflation? Are we in a depression? We have already been in there. They have had to print and put in all these measures over the last decade. If the economy was good, we would have seen an interest rate rising. We would have seen a lot of fruitfulness out there, but it hasn't been. We've been getting less and less. People have had to work longer. They've had to, buy less. They've been getting less when they go and purchase something. They're getting less of a hamburger. They're getting less of a quality of food that's going into their belly. They're getting less of a car. They're getting less of, lots of different things. So, you know, where are we at? Personally, I think we're on track with inflation. I'm not expecting to see a hyperinflation where the cost of everything doubles every day. However, that will occur over the course of the next couple of years, in my opinion. No financial advice, as always. Um, I believe that we're in the early stages of a hyperinflation, which we'll not see until we get to the other side. So somewhere between now and 2030, expect to see the cost of goods rapidly expand in value. What sort of goods do you need to buy in your life? Like whether it be a tractor, right? Tractors are double what they were only 5 years ago, right? What's going up? Everything's going up. So um, I think we're right on track. What stimulus packages do we have at the moment? We've got so many that I expected and some that I never would have expected. JobKeeper, JobSeeker, we've got the tax incentives, we've got the loan holidays. I would never have seen put your mortgage on hold, right? We've got changes to business law. You can trade insolvent up to $1 million worth of debt without going bankrupt to have your company being put into administration. Go and check all the terms about that before anyone wants to sort of pull me apart on that. There is a lot of law changes out there, lots of different stimulus package options out there, basically printing out helicopter money to the masses for people to be able to survive during this time. We've got interest rates at 0%. Universal basic income was something that I talked about 3 years ago. It's not news to me that we've got JobKeeper. I just wouldn't have expected in this sort of format. We're going to see many different variations of this come out over the course of the next couple of years as we have to, get the economy back on track, right? If we're looking at a deficit of nearly $100 billion in 6 months, what about when we start seeing the loss of tax revenue coming through? What about when we start seeing the need for more stimulus packages to starve off a massive recession? We are going to go into a deeper recession. But as I read the article beforehand, looking at when interest rates are going into negative, some sort of things become harder and harder to obtain. So will property prices rise? I believe they will. Will share prices rise? Most likely. Is a share a good thing to have at the moment? Half the companies out there are insolvent, but they're still trading at good levels. They're not producing any returns, not producing any dividends. That's why I'm not invested into those markets at the moment. Am I against shares? No. It's just not my thing at the moment. Am I invested into physical assets? Yes. Am I invested into cryptocurrencies? Yes. Am I invested into business? Yes. Am I invested into any sort of hardcore assets? Yes, I am. Am I invested into metals? Yes, I am. That's what I spoke about last week. Am I invested in the property? We all know that answer, yes, right? And this is a time which I've been very aggressive on. Going back 3 years ago, I wasn't so aggressive on it. I did warn everyone with caution that we were going to be entering into a time of deflation, and we have entered in that. We've gone through that, and we're on the start of the uptick. Will these things happen? Some people think I need to get out of my dollar now. I need to, sell everything and get out of my currency. Holding assets, I believe, is good. Not giving any financial advice, as always. I'm keeping all my debt. I love all my debt, and I see those assets that I've got debt attached to, going up in the future, and I'll plan on selling down some of those assets at the end of this cycle that we're going through, maybe in the next 3 years, 5 years, 7 years, 10 years, when everything's been hyperinflated away to oblivion, and pay out those deadbeat loans with the worthless cash that comes from the sale of whatever asset. So, what other aspects and incentives can we see? Who knows? Next month, in the next fortnight, whenever the budget is, we will start seeing some new, I believe, we'll start seeing some new sort of stimulus packages and incentives and sort of benefits for people. Maybe removal of payroll taxes, maybe the incentives as far as around business tax, corporation tax. It's a good time to be in business for a lot of business people out there. So yeah, we are going to see a lot more stimulus packages come out. There is going to be a lot of people benefiting from this time and a lot of people doing it tough during this time. So, whilst it's not something, whilst I might be very, very happy at this point of time, I need to also look at the fact that some people aren't doing the best in life, and we should always, try and support those people that aren't. Um, Sometimes I speak to people in Melbourne and they're like, things are shit, man. They might have a really good outlook, but they might be talking about, just how they feel like they're in prison. Some people down there are like, this is the happiest time ever because I'm seeing the fact that I'm awake, right? This is giving me the opportunity to see that I'm living in the matrix. And, yeah, it's just an interesting time to be alive. So, on that note, I'm about to get onto my questions for everyone, but I want to get into something very important, which is the winner of the competition that I had last week. For those of you that weren't watching beforehand or weren't watching last week, um, I did run a competition, and that competition was for our community to partake in. It was for someone to win 10 ounces of silver. You tell me how you'd like it. I would like to see, and I don't know about this person if they do or do not have any silver at the moment. If it's your first bit of silver that you're ever owning, I'm going to be really excited to be able to put you on that journey and be able to give you some, so you can hold it, touch it, feel it, and be able to have that in your possession. But lots of people, wrote some cool stories to us about their position, what they've been able to learn, from the community, what they've been able to obtain information and how they've been able to apply that. And I do have a winner. I asked a fair few people to give me feedback. I've got some people that have been, sort of judging this and giving me, why said people should win, and spoken to my staff and whatnot. I did leave it open till now to see if anyone did come in with a cool story as well. But I'm going to announce this one. This is to someone that's in the community. I always see him posting here. I always see them, trying to improve their knowledge base and their position, and you're pushing themselves to really get ahead, and really excited by that. And this person here, I'm going to announce it. Drum roll. To Lisa Dangola, which wrote a review on Google, and the reason why everyone was saying is just by how proud they are of seeing her commitment and dedication, and her husband's commitment and dedication to their journey, and them being able to change their life and live life on their terms. So the tough thing is that there's so many people that have done really, really cool and awesome things out there. And being, I wish I could give prizes to everybody that shared their story, but unfortunately, I would be broke by the time I do that, because there's so many cool stories that happen in this community. And yeah, I always love everyone, being a part and tuning in on Tuesday nights, and being a part of the community. And yeah, I just want to, if we can all give like a high five to a clap to Lisa, Lisa Dangola. If you want to flick me a message later, if not, I'm sure you'll send me a text, or I'll send you a text, and we'll chat offline on how I'm going to get you your silver that you have won. So awesome. And thanks for the lovely review as well. So yeah, moving right along to your questions and comments this week. I did go to Macca's the other week, and I saw that a hamburger. So a hamburger used to be $1. Some people call it a junior burger. It's like a cheeseburger without the cheese. $1. It went to $1.50 at the start of Corona, and now it's $2. Who remembers having the dollar loose change menu a few years ago? You could buy a bag of chips, apple pie, or whatever. Right? These things are no longer $1. Right? What happened to the $2 store? That went bankrupt. Right? We've been slowly seeing the removal of our currency and the debasement of the losing of the value. Lisa, I just saw your message. Congrats. Yeah, now we're seeing all different things happen here. So McDonald's. Hey Nath, a chicken and cheeseburger is $4 at Macca's. They were $2 when they first came out. Effing hell, hashtag inflation, right? So here we are, looking at a chicken and cheese burger that is now gone up to $4. That's really expensive because it's really crap. Last time I had one of them, it was really crap. But a cheeseburger, a junior burger or a hamburger is now $2. That's 100% inflation in this year. I know it is a loss leader, but they cannot afford to give a loss leader anymore at that level. So a 30-cent cone is now like 70 cents or 80 cents or a dollar. Just interesting to see. Um, got some messages here. Hey Nathan, this is your videos last few weeks. Learned so much from you. Thank you for the information you share. You're doing it awesome, and keep up the hustle. Not sure if you've seen this article. Maybe something of interest to you. Um, no, I haven't seen that one. Hey Birchie, love your work. Seems like the biggest risk is we have heaps of debt now and plan on being crushed by inflation. Then before the collapse of the currency, interest rates go through the roof. If we haven't paid down the debt, will be screwed. Is this why you collect bullion, etc., to sell and pay down the debt before this happened? Cheers, Fraser from New Zealand. Thanks a lot for my friends over in New Zealand that love to watch and be a part of the community. So I notice I'm mindful that I'm nearly at 60 minutes, so I'm trying to keep it to an hour square. So yeah, I see that at this point in time, the valuation of the currency, at this point, having cash is really good because you can go and buy certain things. But the more cash they're printing, the less purchasing power that it's got. So you need to pay more money to buy the same asset as you could today in the future because people will be wanting more because the cost of everything starts rising. There could become a day when interest rates do go. If we look at over in Turkey, interest rates went up to about 60% to try and combat inflation. When the currency completely dies, interest rates could go parabolic, and that period of time, that will be a very fun time as well. So a lot of people will be fearful if you start taking out debt at the top end of this cycle, right? And you go and buy a property in Western Sydney for $10 million for a little unit that might cost 200 grand now, and you take out a loan and then interest rates start going up parabolic, that's where people will start to get slaughtered. So yeah, be mindful. The interest rates may go up a lot in the future, but at this period of time, I don't see that being the case. If interest rates went up, not just the property market would crash, every business that's taken out debt, every government that's taken out debt, everyone around the world would go bankrupt. So it's a checkmate position for the policymakers of the currencies out there. Hi Nathan, can you address the effect to no international immigration in the property market at all? Also, inflation update, the new 2021 Hilux has $13,000 for no apparent reason. $13,000 price increase to $78,000 for the top of the range. And that's happening, right? I've seen that in the used car market, the new car market. I purchased a new Ford Ranger a few months ago. The cost of that one was going up. I remember at Christmas, I put a deposit on one. That was a Wild Track X. I put it on for like $58,000. And then I didn't settle on it. I tried to rebuy it, and they were trying to save like $65,000, and that was at a bargain sort of price. I ended up going to get the Raptor, and it was like 74 grand. But cost of all goods are going up. Vehicles are very, very expensive. So thanks a lot for sharing that. $13,000. You're thinking of buying a new Hilux? The new Hilux has gone up by $13,000. Here we are looking at an article here. Here is an inflation pick, a bit random, but these cricket bats were $700 10 years ago for the same design, the same willow. I know absolutely nothing about cricket. This here, wow, cricket bats are really expensive by the looks of things. $2,495 for a cricket bat. Yeah, wow. So yeah, here's an inflation pick. The cricket bats apparently sold for $700 10 years ago and are now selling for $2,495. Very expensive cricket bats. Hey Nathan, this is Amber. You don't know me, but I watch your feeds. I just went back to watch last week's feed and you announced a competition. I'm registered on Birch Feed. I didn't take a pick for the competition. I think your feeds are profound and much needed to be information in this area is hectic and it's free. I'm not sure if there is anyone out there currently who would offer this knowledge. Thanks, legend. Keep the lives rolling. Thanks a lot. The coin in the biblical days. Wow. Thanks, Eve. So thanks a lot, everyone, for sharing through. I'm going to let Instagram leave now, and thanks for watching Instagram. I will be doing a live crossover in the course of the next few weeks. Um, Instagram is over for the night. I will be doing Instagram live where I'll be taking on people to come onto the videos. So I want to give you guys a bit of a heads up for that. That may be next week or the week after. I'll be putting out some more information on Facebook and on Instagram about how to register and whatnot. So just so you guys are prepared. I've never done it beforehand. It could be next week. I'm going to aim for next week for this to occur. For me to be able to do live streams on there with you. On Facebook won't allow. I'd love to be able to get you guys on, have a chat. You can ask a question that you may have, and I can answer that and then take the next one. So it's like a radio phone host to make it more interactive with the community. So if you are on Facebook and you're not on Instagram, head over to Instagram. It is what is the Instagram page? It's just B.Invested over on Instagram. So what's this? Cool. Sorry, got lots of messages coming through. Hey Birchie, we're still in lockdown. I always love Tuesdays because I hear such valuable content from you delivering results since 1985. Thanks, Luke. I appreciate the message here. Hey mate, how much time do you give it before affordable property skyrockets, therefore making it difficult to build a portfolio? I am able to start in January. I don't have your name here, so I don't know who to answer this one to, but I got this asked this question. Property prices are sort of skyrocketing at the moment. I'm seeing deals that I'm losing every day of the week. There's less stock coming in the market, more competition. People are coming into the property market. They're not getting the returns on the stock market. They're not getting the returns in the super funds. They're not getting the returns in other markets. No shares, or I won't say no shares, but a lot of shares have held back the dividends. So people are looking for cash flow and whatnot. You put your money in the bank, it'll be costing you to put your money in the bank. So yeah, a lot of people are looking for returns out there. Some properties are giving sort of 7, 8, 10, 15, 20% returns. So people are moving into the market. The market is hot at the moment. How hot is that going? A few examples. Today I lost 4 deals where people literally, I had the deals accepted last night. By this morning, contracts went out. So I got the deal negotiated from the real estate agent. Contracts went out to my investors. I sent them out to people. People said, yep, we want to go ahead with it. Contracts went out, and then I lost the properties because they sold for more than the asking price. There is an inflation happening in the property market. Is it the end of the world? Should we run out there and buy property today? It's never good to go and have FOMO. It's important to have the right strategy and to buy the right properties in line with your strategy. As for accumulation, will there still be deals out there in 10 years' time? I believe so. Is it the end of the world today and you have to go out there and rush out and buy a property? Prices are on the rise. Property prices in the markets that I'm buying in have gone up a lot this year. Now, I do know of markets that I bought for people, and they know the markets that they bought in going back in December last year, which are now double. Literally some markets that have been buying in have doubled in 2020. Not all markets, some markets. Will there be markets available to pick up that are good value in 2021? Yes. Will there be good markets in 2022, 2023? Yes. Will the property prices in general be heading up? Yes. But it doesn't mean you should go and get FOMO and just run out there and buy anything. I think it's important for everyone to have a strategy. As I always talk about, I run a map session, a strategy session, which is designed to work out what are your goals, where are you at, what are you trying to do, and then try and put together an acquisition plan to get there. If you do want one of them, call my office 1300 367 925. Leave a message or send us a private message. My team will be in touch. I know I can see and hear a few people like Kev and Gemma and Pat and Aaron are in the comments, and they message here. So my team are around if you need help on sort of working out a strategy that's right for you. Reach out to the team, and yeah, happy to help out where we can. Hey Nathan, what's your take on the banks recently providing lower valuations for existing properties which they already mortgage? Example, using an investment property to buy more properties, but the investment property is being undervalued by the bank by 60 grand compared to CoreLogic data and 3 separate real estate appraisals. Banks are lowering the risk. Thanks, Rob. Melbourne market. Rob, I'm not seeing that. I'm seeing some very, very good and strong valuations coming in from the market. There's a lot of banks with appetite. They're wanting to get loans on their books. They want people to get into debt with them. So yeah, if you do need help on getting equity out of a property, feel free to reach out to my team. I have a team of very experienced and sophisticated brokers which do specialize in getting equity out. That is our game, right? That is our game. I just did a deal last week, 2 weeks ago actually. It settled. It was in Botany in Sydney, so next to Sydney Airport. It was a unit in Botany. It was a block of six units. Purchase price was 390, 410, 535 for the two betters. So there's 3 different price ranges there. They revalued at 585 and 700,000. So those investors were able to pull out sort of $150,000, $160,000 within a week of settling. Literally, they all went out, pulled their equity, used that equity to go buy another 2 or 3 properties out there. So as we start seeing the markets increasing in value, there's going to be a lot of people that are generating wealth. And if you are smart at structuring how your affairs are, obviously without giving financial advice, for those of you that are watching and trolling my videos out there from sort of government entities, that's cool. Structuring your portfolio in a way where if you're buying a property, you're getting the equity in it, you take that equity out, you go and buy another said asset, and then you've got that capital to play with to build out your position. So yeah, if you do need help, feel free to reach out to my office. Happy to help out where my team can. So just seen another message here. Combank told me they only look into your bank account for 3 months. I was thinking of using pay out personal loan, and then in 3 months I'll be clear to purchase. If you are planning on doing something strategically with your position, I see your name now is Josh. That's me talking to you. Reach out to my team before you do anything. Plan out that debt strategy. Make sure you're accumulating the debt correctly and making sure that you've got a way to pay down that debt correctly. So you can reach out to my team, 1300 367 925. Email us at admin@binvested.com.au, and my team will put you in contact with the right relevant team to help you plan for that and to be able to capitalize on the current market. The market is very hot out there. I have not seen a market as hot as what we have in 2020 since about 2010, 2009, 2010, 2011. It was a very hot market, and that was pre-Sydney boom. Before the boom occurred in Sydney, there was a market which was very depressed. We've had a depressed market in all different markets. I used to give a wrap-up of every state. So what are my views for the markets for the next year, the year ahead? And in and around 2017, I said, look, I'm not going to do this anymore. I'm not going to do it for the time being, simply due to the fact that that we're going to see every market sort of turn a crap at that period of time. And the markets all hit a peak when APRA came in and made it tougher for people to get liquidity and to purchase and to get loans and obtain finance to build a portfolio or to buy a property. We start to see the market go backwards, and monetary policy was in a tightening phase. Now we're starting to see monetary policy turn the opposite direction. We're starting to see the markets increase. Very similar time to what we saw in 2009, 10 and 11. coming off the back of the GFC is where we are at the moment. So all these incentives and stimulus packages and cheap money and ability to obtain money, this is all going to push for inflationary pressures into all markets. It doesn't matter if it's your food, doesn't matter if it's the staff member, doesn't matter if it's a worker, doesn't matter if it's transport, doesn't matter if it's Uber, doesn't matter if it's your Netflix. Everything is inflating in value. Ultimately, you want to see inflation on the biggest assets that are out there. If you can take big assets and see them grow up in value, that's the cool part, because that's where wealth is really created. This is a time we always talk about, I haven't talked about for a while, which is wealth changing hands. This is a time where wealth will change from weak hands into strong hands. What do I mean by weak hands and strong hands? Weak hands are people that get scared and fearful and make wrong decisions based on fear and without having clarity on a strategy. Strong hands are people that are knowledgeable, are sitting there like a hawk and are jumping on opportunities when they see that they arise. Depending on where you're at, depending on where your knowledge base is, if you know what you need to do, then you know how to be able to take and execute those strategies and ideas. So do take this time, and this is what I feel very excited by being a part of your evenings every Tuesday, and whenever you watch this broadcast yourself, is being able to arm you with some of that information and a bit of that knowledge, so you can create personal liberty and freedom for yourself, for your family, and really kick ass during this time. Because I couldn't just sit here and just be like, okay, cool, I'm going to live my own life. But I actually get a kick out of sharing that knowledge and being able to hang around people with the same views, the same interests, the same philosophies, same belief systems that are all striving for a better purpose. So on that note, I see that you've got a map session booked in for me next week, so look forward to having that chat next week, Josh. So I might go through a few of your questions here if you want me to stay on for a bit longer. I won't keep for too long. Lydia, wow, it's Aaron's 40th. Happy birthday to Aaron. And thanks for watching me while you're having dinner. So have a beautiful evening, and happy birthday to Aaron. Everyone here saying hi. Thanks for the love, everyone. Questions. Michelle, a big shout out to Michelle. She's doing awesome, and the whole team there in Queensland, doing really cool things, being ahead of the markets, and putting strategies in place to really crush it up there. So I was talking to Michelle beforehand, and I said I'd give her some love on the Facebook Live. So thanks for the whole team up there. There's a really, really strong team. So if you guys have got properties in Queensland, all along the coast, we manage from the bottom of from Tweed Heads all the way up to the top in Cairns, all the way up the coastline, all the way inland as well. If you have any properties in Queensland, make sure you're getting the highest cash flow, make sure you're getting the best return. Reach out to my team. If you want to flick me a text on that phone, I can put you in contact with my team in Queensland. I have a very, very competent and sophisticated team up there to get you the highest returns on your properties. Lots of questions here. I've been reading them mainly from my phone the last few weeks. So does that mean that a lot of people on JobKeeper come March, when is axed with high mortgages, are screwed? No, they're going to make interest rates cheaper and cheaper to hold and bring out some new stimulus packages. Everyone said that they're going to be screwed in September, and here we are, and no one's fallen off a cliff. They're going to have to keep supporting this market artificially to keep it alive. I'm not saying that we are not in a bubble. The bubble is very different than any sort of property market or stock market. This is a currency bubble, and it is being manipulated, and it looks like it's going to be manipulated into oblivion as our currency collapses. Steve asked, hey Nathan, can you please talk about the Birchfeed article showing that APRA is lightening the lending criteria for the banks, what this means in terms of borrowing and serviceability? Steve, we need to catch up. We still need to do one little move, which we know we need to fix. I'll give you a call in the next few days, but it's more of a question for Zinger, everybody out there. If you guys want to know what your servicing position's like, how it will affect you, this is not something that's going to come into play as of today. with the changes of the APRA and the lending market. This is something that will roll out over the course of the next sort of few months, 3 months, 6 months, by March next year. Um, so the banks got fined, like Westpac, $7 billion. Will other banks be fined as well for their behaviour, or from the Royal Commission? Will this have direct impact on lending criteria with banks' policy as a result? The banks went out and sort of, raised capital. If we look at what their capital raise was beforehand, it sort of mimics the amount that they got fined. So it's very interesting. They're all a bunch of, banksters and whatnot. However, yeah, we're seeing lots and lots of messages here for Lisa and for other people, or for Lisa. But yeah, with it, from the bank's perspective, in my personal view, the Royal Commission itself was a load of crap, right? Nothing ever got changed from the Royal Commission. Everyone is expecting banks are going to be held accountable, people are going to go to jail, they're going to make things much tougher to get finance, etc. Reality of it is, if they make things tougher to get finance, the whole economy is going to collapse. So a lot of people saying, yeah, with their pitchforks, but the other side, the banks have got this bigger scam and the whole system will collapse. So they're not going to let it collapse until everybody realizes that the people with the power, the people with the money, they're not gonna let this thing collapse. So you're gonna keep reinflating it, reinventing it, making it a bigger scam, making it a bigger Ponzi scheme, and blow it out of proportion into another market. So, what would my expectations been from a Royal Commission? I like looking at the bankers' game, right? That's my personal viewpoint. When the bankers win, I'm like, yeah, I'm winning, right? But does that mean that I agree with the banker? No. It's just that I see the game board that I'm presented with, and I'm trying to take the best opportunity that I can to win on that game board, understanding how the chessboard works and Monopoly playing field works as well. Alex, check out this. This says, let me explain what happens. I need to read that article. I don't know what it is, so I'll read that afterwards. Have contacts wanting to sell massive amounts of farmland in Toowoomba. Would you be interested? Always happy to look at what someone has to sell and what I can purchase. Yeah, on that note, guys, it has been an hour and 17 minutes. I tried keeping it to an hour. I had to go over for you guys on Facebook. Thanks a lot for having me as a part of your family and a part of your viewing this Tuesday. As always, if you could share this video around and like it and get the community growing, that'd be awesome. If there's anything I can help you with in the meanwhile, feel free to reach out to my office, 1300 367 925. Or send us an email at admin@binvested.com.au. Catch up soon. Keep being awesome. And next week, remember to go over to Instagram, and I will try and have a video where we can actually go on and we can have both of us on video on Instagram, being able to do a Instagram live and answer your questions. So be more interactive that way. So thanks, guys, and keep being awesome. Bye for now.